Hi, good evening, traders. We are on the 14th of September 2021, evening 8:30 p.m. Indian Standard Time. Nifty, yet another flattish close today. Could have been better. The Nifty futures in front of us, this is the daily chart, opened well enough, stretched itself towards that 17,434, almost close to its all-time highs in the futures chart, but then slipped towards the later half of the day to post a close at 17,384, a gain of just 25 points for the day. 1, 2, 3, 4, 5, 6. We have now a clear-cut consolidation, range-bound behavior from the market for the past 6 trading sessions. This consolidation is nothing but essentially a slowdown of the last trending move that we've had. Prices, markets always move in cyclical nature, where a trendy move, wherein directional movement slows down to non-directional movement and then further towards direction. This is nature. And so 6 days now, the index is consolidating. From the bullish perspective, the good thing is it is not correcting. So it's holding on to its highs, which shows that at this juncture, at this time, there is not much of selling. Market participants probably are not in a hurry to sell. Why will they not be in a hurry to sell or not sell at all? Because probably they expect higher upsides. So are we looking for further upsides? As long as the trend stays up, and beautifully, these are the two moving averages, 13 period and 34 period, holding exceptionally well, it clearly shows the strength of the trend. So as long as the recent lows, which is that 17,300, we have this marked on the 75-minute time frame. This is the intraday chart. So as long as we don't see a break of this level again, and last time we saw an intraday break just to bounce back again. So this time, if it breaks, it is important that it not only breaks but sustains below that, creating some kind of a congestion on the top on the 75-minute time frame. We can clearly see that some kind of a double topish kind of a behavior shaping up, but it won't be prudent to call this a reversal pattern and go bearish. I would rather reiterate what we were discussing yesterday, the fact that you should be a little cautious, especially going long aggressively at this stage. We've seen how stocks have picked up momentum, and it's been a stock specific market indeed. We've seen how the media stocks moved today. We saw how IRCTC behaved, etc. But also there have been stocks which have slipped quite a bit from the day's high. So it won't be easy going. We need to be a little more agile and little more careful. So what's the view on the Nifty? Trend up, momentum intact, losing in the sense it's easing off a little bit. So we need to see how it plays out. Tomorrow's opening and tomorrow's close is going to be one more such case, which can give us a likely headway about which way the market is going to move. Let's see. But 17,300 on the downside, and of course 17,450, 17,500 is the level that one should look for on the upside. The sectoral indices, of course, the media stocks, thanks to Z, gave a huge, big gap up and momentum on the upside. At times, change is always good. And so the much needed, probably the markets anticipating that the much needed change in the management of the company would lead to some positivity for a long term going forward. So that's one pocket which rallied significantly, but that pocket doesn't add too much weightage to the overall markets. Apart from that, auto, mid caps, private banks did good, 1% up. We have the metals, FMCG, few financial services stocks which were mildly negative, but overall the markets held, the sectors held pretty well, not a problem over there. It's important that we talk about Bank Nifty because it's going to be a very key sector going forward for the overall market. Now this chart is also in an uptrend. It is consolidating. You can call it a triangular pattern, some kind of a ascending triangle or some kind of a pennant symmetric triangular pattern. So the trend is up. The good thing is it needs a breakout. So levels to watch for is close to that 36,950, so 37,000 on the upside. And yes, on the downside, these lows at 36,300 are the supposed to look for. As because the trend is up, as because since it has reversed from the lows of 34,300, every drop has led to a nice newer highs. We can anticipate that the the index is going to give a similar kind of a move on the upside. And for that, private sector banks have to play a role. And amongst the PSU banks, I always prefer State Bank of India. Now, SBI did inch up a little bit, but it slipped. I think so did Axis Bank. Gave a nice move early half of today's trade, but then it slipped. So this has been the case with quite a few stocks in today's session. The global markets, as I record this video today evening, 8:35, the Dow Jones Industrial is trading 200 points down. If you recall in yesterday's video, I did mention about the dead cat bounce. Now, if we have a close of the Dow Jones at this level, 34,600, 660, 650 kind of levels, then this bounce back, which was a 260 points bounce back on Monday, this will turn out to be a clear-cut dead cat bounce. What that means is the break of this low and a follow-through sell-off is very, very likely. So we need to be a little careful, because if we get some negative cues from the global markets, it can spook the SGX Nifty, and we might get a weakish kind of opening. SGX Nifty is trading around 373, 17 points just down, nothing much. So not too much to get worried about, but enough to be a little careful. So let's keep a positive bias and stay open to even a drop as well as a breakout on the upside. I would suggest that if we are trading predominantly on the long side, be double agile. In fact, in the sense that be shrewd enough to book out your profits as soon as possible. Don't sit on your profits for too long, because markets probably will face some selling pressure at newer highs. Let's see. But tomorrow's candlestick will probably give us a better clarity about the immediate trend of the market. All right. Till then, for the rest of this week, trade well, trade well.